If you are thinking about starting a business, the first thing you need to figure out is what type of business structure will best suit your needs. Hi, I'm Krishan Sharma, founder and director of KNS Accountants. As a team, our goal is to provide you with the necessary information to understand your financial position and make the best decision for your business. Deciding on your business structure might be one of the most crucial business decisions you make, so getting it right is important. Whether you are a first-time entrepreneur or seasoned business owner, selecting the right structure for your business can be challenging. There are multiple options, all with different pros and cons. But unfortunately, far too many business owners match their personal and business interests and end up leaving themselves at risk. So in today's video, I want to compare 3 business structures so that you can start thinking about how you would need to structure your business to meet your current financial circumstances and future financial goals. But before we get started on the list, it is important to note that the information is intended as a guide only. It should not be seen to constitute legal or tax advice. You should, where necessary, seek your own advice for any legal or tax issues raised in your business affairs. When choosing the right structure for your business, you should consider 4 criteria: personal liability, whether you have partners or investors in the business, the administrative cost of setting up and maintaining your business structure, and the tax effectiveness of the structure. In Australia, there are generally 4 options for structuring your business, but we are going to discuss 3 of them in context of these criteria. The first structure is a sole trader. This structure is designed for business owners who are the sole proprietors of their business and is generally suitable for small-scale business operations. It is the simplest and least expensive option on the list, and there are minimal legal procedures to start a sole trader business. Unfortunately, this structure doesn't give you much protection if things go wrong, because sole traders are not fully separate entities from their owners. In other words, debtors can claim from your personal assets to pay business debts. And as a sole trader, you will declare your income on your personal tax return and pay tax at your marginal rate. Next on the list is a company structure. Forming a proprietary limited company effectively makes your business a separate legal entity from you. The benefit of this is that liabilities are limited to the company's assets only, so your personal assets are protected in the event of any legal actions and company debts. The other benefit of setting up a company is that it gives you an ability to structure your earnings from the business in the most tax-effective way. But this structure involves quite a bit of paperwork and can be expensive to maintain. There are also certain legal and financial reporting obligations you have to meet. Lastly, we have a trust structure. With a trust structure, you essentially transfer your business to a third party who has legal control to run the business. They also distribute income and capital between the relevant beneficiaries. Holding your business assets in a trust provides asset protection and limits liability from operating the business. Beneficiaries of a trust are generally not liable for trust debts, unlike sole traders, and trustees is generally incorporated as a Pty Limited to give some protection from the liability too. But the main benefit of operating a trust is that it gives you a flexibility in how income is distributed. The trust usually pays no tax but distributes its profit to the beneficiaries each year who are liable to pay tax at their marginal rate. This gives you some tax planning flexibility. But you will need to think about the fact that setting up a trust and managing it can be expensive and relatively complex. It is also most difficult structure to dissolve or make changes to once it has been established. So each structure has advantages, disadvantages, and responsibilities, and deciding on a structure is dependent on several different factors. For example, each individual situation is different and your goals can vary. So you will need to consider what is important to you and the nature of your business. Talking to a business accountant can help you figure out what exact needs are and which business structure would best align with your goal. Anyways guys, I hope you find this video helpful. If you did, make sure to give it a thumbs up and subscribe to our channel for more guidance on navigating the world of business. See you next time.